All right, so yeah, we'll get started first. I'll go over real briefly the Thinkorswim. We got a new person on here, so we'll go over the Thinkorswim. I got a couple questions on this, so we'll go over the Thinkorswim really quick in terms of how you get in and out of a trade. All right, so real quick, we'll just go over this real quick. Um, Basically, when you come in here, all right, on your Thinkorswim, once you log in, you'll actually, be at whether it's positions, trade, charts, scans. Okay, you're gonna go to where it says trade. You're gonna go to where it says trade. You're gonna go to option chain, and then you're gonna select the expiration date that you're trading. Okay, typically we like to trade same day, so you'll go in here, and then you'll go to again the puts are on the right side, calls on the left side. We want to take this gray shaded area on the put side, the gray shaded area on the call side is what we call in the money. In the money contracts move a lot faster in terms of whether the trade is going your way, whether you're gaining money or whether you're losing money. It goes pretty fast. Okay, typically based on the delta. All right. All right. Typically, I always encourage everybody to take 1 to 2 trades that are out of the money. All right, so over here it'll be these two. Okay. All right, and then over on the call side it'll be these two here. And typically we like to take the trades with a zero point 0.3 delta or higher. Okay, so 0.3 delta higher, which is the 0.34, this is the 0.43. Over here is a 0.47, 0.36. Okay, and just briefly, the reason we do that, all right, is because sometimes the trade doesn't go your way right away. All right. So even if it pulls back a little bit higher than your entry or lower than your entry, depending on whether you got in for a call or a put, then you want your loss, excuse me, to move slower. So if you take one that's 1 to 2 out of the money, you won't lose money as fast. All right. And then once it begins to drop 1 to 2 to 3 points, now you become in the money and now you want it to move a lot faster. All right. So that's why I typically take 1 to 2 out of the money. All right. And that's going to help you out in terms of minimizing your losses and then maximizing your wins. All right. Especially once you get up to trading more than, 1 to 2 contracts. All right. You trade, 4 to 5 contracts and it doesn't go your way and you're in the money. I mean, you could lose a lot of money really fast. All right. So taking 1 to 2 out of the money actually helps you minimize the losses and maximize the wins. All right. Um, Also, let's go to all right. So say for instance, I say take a put at when it gets to a certain level, and I say take a 404 put. All right. Whenever I call these out, I try to call out whatever the one out of the money is. All right. So it's going to be up to you to determine whether or not you want to take this one that's $100 or this one that's $140. All right. Your account size and what you want to do determines how you get in on this. Okay. It determines how you get in on this. All right. Hold on 1 second. I think somebody's trying to get in here. Hold on 1 second, guys. All right. So once you do that, okay, all right, you want to make sure you select that. I always typically call it out, which is like whatever this number is, this first one that's out of the money. All right, so I say take a 404 put when it pulls back to whatever area it pulls back to. And again, depending on your account size, you may want to take this one, all right, the 403 put, as opposed to the 404 put. All right, so this one still has a 0.3 delta or higher. And then, it just depends on your account size. If you have a smaller account size, then this one here that's 0.26 is only $70, right? And it's almost close to a 0.3 delta. All right, so again, really it's based on your account size. All right, so that's whichever one you actually decide to get into, that's going to be up to you. All right, so either way, once you click it, all right, you'll have this up here. This is my demo account. So typically for you guys here, if you go up to settings and you go up to other defaults, if you click this, then you can go to stocks or options, and you can set this to where you have it as a market order, and you can set this to one. Two. Set this to one. Okay. All right. So if you set this to one, all right. Let me get out of here. Now that I did that, once you come here, it'll automatically be on market, and it'll automatically have one contract. That way you don't have to waste time changing this and then coming to changing this from limit to market. So again, you go up to settings or the defaults, you can change this. All right, just go ahead and change the stocks as well. And we don't really trade the futures of Forex. All right, so that way every time you come in here, you don't have to waste time changing that. All right, so that's a good setting to have. So either way, all right, I'll come in here either way. All right, so either way, all right, once you come in here, pick the number of contracts that you want. All right, just go to review. All right, and then you just go to delete. All right, just go to, I'm sorry, just go to send. It'll show you the price of the contract, and then it's always some kind of commissions fee, and then it'll show you the total price that you're going to be paying. Then once you hit send, all right, then it'll put you in the actual trade. Okay, it'll put you in the trade. All right, so I'm gonna delete this because obviously I don't want to get into a trade. All right, now once you select that, all right, if you select option chain again, if you're in a trade, it'll show up right here. All right, it'll show up right here. All right, now to get out of a trade, you'll need to select once your position is here, there'll be a button just like this that you can select. Once you select that, something will come up right here that says close selected or roll selected. Once you press close selected, you'll have a screen that pops up that looks like this, right? And you'll close the number of contracts you have. It should be at a market order. You hit review, you hit send, and it'll close out the trade for you. All right, so that's how you get in and out of a trade, all right, using Thinkorswim. All right, so you get in and out of a trade using Thinkorswim. All right, that way, any questions on that before I move forward? All right, so no questions on that. I just wanted to review that really quick. Know we got a couple of new people here. All right, that all right, had some questions on that. So that's typically how you get in and out of trade. All right, and this is pretty much the screen that you're going to use now. They have a desktop app. I don't like to use the desktop app. I only use it to read the tape. But I like this because I like it from my phone, and my computer, and my iPad. All right.
I don't like the desktop either. I've been, I mean the app part. It's not as clear as this.
Yeah. The desktop. I mean, I set mine up, and I've worked it because that's when I first started out. I didn't know anything other than just the desktop app. So I use it to see what the volume in terms of their strike prices. So when you read the tape, it'll show you every time somebody purchases a contract, it'll show you at what strike price and whether it's a call or a put. But it moves really fast. If you don't know how to read it, I just wouldn't encourage you even looking at it. Do not look confuse you. But other than that, I like the online app. Okay, the web app.
Kev, on the because I trade off my phone. Is there a way to set the order like 10 one order, 10 orders, 4 orders on the phone, or is it automatically just keep
it
going?
automatically does it. Yep. So if you set it here, in this,
Oh,
in your
second.
settings here, yep, it automatically does it for your phone. Anytime you log in, those settings are there, whether it's from a
Okay.
phone or a computer.
That makes sense. Okay.
Yep. And also, if you guys look in the Discord, all right, under placing a trade, all right, I actually have under placing a trade, I actually have the same thing that I just went over. I actually have it here, and also how to do it from a cell phone or a tablet. All right, so I have that on there already. Okay, so but basically that's how you get in and out of a trade. And again, understanding this part is half the battle, right? Understanding how to get in and out is pretty much half the battle. All right. Now, really quickly, I'm gonna just go through kind of what we saw. And I saw this thing was shooting up like crazy on Friday. All right, so I actually didn't even really look at the charts. I think somebody hit me up, and I actually took a peek at it, but I was on the road, so I wasn't actually looking at it. But everything shot up, and as you guys remember from Thursday, I said if it breaks above this channel here, all right, here. Remember, I was talking about this channel down, up, down, and then if it broke outside of this channel, we were going to get some upside, right? So this is Thursday. This is Thursday. Had to pull back here, all right, and then all of this is Thursday, right? So again, these channels, okay, or what I call mini trend lines or whatever you want to call it, it gives us indications of what's going on. So you had to break down, had to pull back to a key level here. All right. Then you had to break down again. All right. Then you had a consolidation at a key level at this 393.79. All right. And then once it broke above this channel, all right, then we got it. We got upside movement. Somebody say something? Okay. All right. So we got upside movement. Okay. Then we got the gap up. And again, these gaps now, you got to remember on this gap up, now we're slightly in an uptrend here. All right, simply because of this broken channel here. So the gap up was going to push us further up. All right, going to push us further up. You had the long, this matter of fact, just looking at this is a nice, what am I looking at? What am I about to say? This is a nice what?
Uptrend.
Rally base rally.
All right, rally base rally. Okay. Number one, you have the gap up here, right, which creates a nice demand zone here. All right. And then this pulled all the way back here and went all the way back up. All right. Then you got, and typically I would turn this blue, but then you got this to technically, basically all the way down here again. So technically all of this, right, would be a demand zone. All right, so technically all of this would be. Yeah, so technically all of this would be a demand zone. So you got your basing candle here. All right. You got your basing candle right here. You got a huge move up. All right. You take the box from the top of the candle down to the bottom of the wick, and this creates your demand zone. Okay. All right. Now, this also created a rally, base rally. And then look what happens. This market pulled back, hit right here at the top of this zone, and shot all the way back up. So if you guys were trading on Friday, you should have seen this, and this would have been a good time to catch this move here. All right. And also looks like it would have broken out of this ORB, which would have been here. Actually, then the bottom would have been here. So it supported there. Oh, excuse me. All right, so that would have been something good that you can catch. So again, what we're doing is we're going wherever the market takes us. So we're looking at different demand zones. All right, and so now you have a demand zone. Did you have a question, Dwight?
Yes. What did you use to predict that would go that high up on Friday? Because I'm looking at the charts and you said it took off. What did we do previously to see that it was going to go up?
Okay, good. Yeah, good question. This area here. All right, so this area here. Let me get rid of these lines. I might delete all of these drawings and then just draw them back. All right, so essentially, all right, we're looking at this area right here. All right, so you got a lot of consolidation in this area. And we're looking at this main trend line right here, this gold line that I have coming down, okay? So this is the key areas that we were looking at, all right? And I said on Thursday, once it broke above, you see it hit here, it touched one time here, came back down, touched here, came back down, touched here, came back down, all right? Touched here, came back down, then we got a break above, but it's still closed below. Now this next candle started above this orange line, pulled back to this 393.79, all right, which is a key area that we were looking at, this orange line here, all right? So you got the pull back to that orange line and then it takes off, all right? And again, you got another basing candle here, all right, right here. All right, so you got another basing candle here, it never came back here, but you got a small basing red candle and a huge blue candle. All right, then this is what started the uptrend. All right, this is what started the uptrend. Now, I'm not actually looking for longs necessarily, you know, from an overall trend perspective until we break this 416 level, right? All right, so it consolidated, shot all the way down. It finally broke out of this channel. It's on the day chart here. All right, so now depending on where the market opens up tomorrow in terms of the pre-market, all right, it'll give us, you know, some indication as to where this market is trying to go. All right, but I got to, unless it, you know, we're still technically in a downtrend, although for the past 2 days we've had huge up candles. All right, there's a huge blue one, another huge blue one. All right. All right, especially off of a strong key area of resistance at this 393 level. All right, so then the 200 MA, which is this turquoise line here, it bounced right off of this plus a key level. So that's a really good, strong indication of a bounce, which we did get. All right, we got 2 big bounces. All right, so depending on where the market opens back up, all right, then we'll see what happens tomorrow morning. All right, but I'm still projecting that the market is going to continue to fall by March 17th. All right, so still got, you know, about 10 days before that actually happens. All right, so about 5 trading days, 5 or 6 trading days before that actually happens. So once we see this, you know, what it's going to do this week. But my prediction is it's going to continue to come up here, kind of settle down right around this 410 area where it kept rejecting at, especially if it gaps up right around here, and ultimately get to this 416 and possibly create a double top. So you have up here, then you'll have down here, then you'll have up here, all right, and then you have a down here, okay, and then it'll continue to go down. This will be your neckline right at that 397 area, 393.97, 79 area, all right. And then once it breaks this area, then we'll take it all the way down, okay. So that's kind of what I see happening. All right, this M pattern happening here. All right, especially right off this key area of support here, this 393.79. All right, so I'm looking for this market to push back up, create a double top, equal high. All right, and then come back down. And by that time, that would have been, you know, right around the March 17th date for that FOMC meeting. All right, because remember, you need a catalyst to really move the markets. All right, and so the next catalyst event is the FOMC meeting, which is March 17th. All right, so that's kind of what I see there on SPY in terms of where we're going tomorrow. So look for a little more upside. And again, from a bullish perspective, if we can break and hold this 416, all right, and particularly this 421 area, all right, then what we have is a high, a low, a higher high, lower high. Then it needs to get up here to create a higher high and then come back down to this 416 area up in here, 410, create a lower low. All right. All right. And then you'll get, all right, your uptrend. Okay. Down, up here, down, all the way up, create a higher high, lower high, all right, a higher low, should I say, and then continue to trend up. All right, so there's still room for it to continue to go up. Okay, I just think with the way the economy is, and particularly with the Fed speakers all talking about disinflation, as you can see, they haven't said that word since the first FOMC meeting in January. All right, so that's why we had this, huge downtrend for the last month in February. All right, so so that those are two scenarios that we see that could play out. All right, so because of this strong key support, it could come up here and give us the double top, come back down, or it can come all the way up, pass through here, give us a higher high, and then give us a higher low on a pullback. All right. So those are the bullish and bearish scenarios that we can get. And again, we'll see what the market gives us each day, because again, the market is always right. Okay. We don't trade to be right. We trade to win. All right. So whatever way the market is going, that's what we're going to do. All right. One of the things about me is I'm not a swing trader. So I don't typically care whether the market is going up or down, because I'm going to trade daily. So most swing traders are either bullish or bearish. So they're like, hey, I want it to go this way. I really don't care which way it goes. All right. I do actually have a position for March 17th for a put. All right. So I did swing trade that. All right. So I am in there. So I'm expecting it to go down. But again, I understand that it's going to pull up here. All right, or may pull up here before it ever pulls back down. So
is that the 5 minute? Is that the 5 minute chart or the 1 minute or the 1 day?
This is the daily chart.
Okay.
Yeah.
Yeah,
this gives us direction, right? So again, you have a triangle, this ascending triangle here, which is why I drew these patterns here, right? So once it broke out of this area, it went up. And then once we had this channel coming back down, this is key area of support. And I said this on Friday in the pre-market plan before you guys, while you guys are trading, because again, I didn't trade Friday, but I was looking at that as a strong support, that 393 area. All right, so we had the push up there. So that's SPY, QQQ. All right, it's basically almost the same thing for the most part. All right, we got pretty much the same thing. They typically move together. QQQ is a little bit more of an uptrend than SPY is from an overall perspective. All right, but again, it still has not broken the higher high. So technically it's still downtrending. All right, technically it's still downtrending. All right, so, but again, pretty much the same move. I won't spend a lot of time on QQQ because this looks exactly like SPY. All right, you had a key level here. All right, I said it would bounce off of this key level. You got the 200 MA there, the turquoise line, and boom, you got your move up. So again, setting up still for the M pattern, right? Come back down, particularly with this trend line here, and also with the level of resistance up here at this 310, 311 area. Also got a supply zone up here, right? So could get the M pattern. And again, this could also be a pullback because we got a high, low, higher, higher low, and it could break up through here and give us the actual continuation for an uptrend. All right, so those are the bullish and bearish plays that we're looking for. And again, we're just going to let the market tell us what it wants to do, and then we'll follow. All
Hey,
right.
Kevin.
Uh-huh.
Yeah. Can you do a swing? Can we do the swing trade on the day before the 16th? Will that make a difference for us doing it now from the 16th?
What do you mean?
I know you say you're gonna do a swing trade, on the 17th when that meeting. I was just wondering, can we wait until the 16th to do it?
Yeah, I mean, yeah, you can do whatever you want. Yeah, I mean, you can do whatever you
Oh,
want.
okay.
Yeah,
Oh, okay.
yeah,
I didn't know if
yeah.
you meant we need to do it
No.
earlier would make you get more money or not. Oh,
Yeah,
okay.
no. What I'm saying is I'm already in for a put.
Okay. Okay.
For and my expiration date is March 17th.
Okay. You're already in there. Okay. Okay.
Yeah. So I
What
didn't.
price? What
Uh,
price do you have it at? What price do you have it?
I think it was. Hold on one second. Let me see. Let me see. Hold on, let me log in. I think it was 390, I believe. Yeah, 391
Okay.
put.
391. Okay.
Yeah,
I'm just gonna mark that down. Okay.
You
All
got
right.
yeah,
Thanks.
you got to
no
understand
problem.
what Kevin's saying though. Kevin's saying he's expecting to go up first, so he willing to lose right now to come
Right,
back down.
right. Yep. So, and that's the
Okay.
thing about swing trading, right? So, I'm looking to lose a little bit of money first before I actually start gaining money, right?
Okay.
Uh, question here, is there an effective strategy to trade the big gaps, or do you use the same method? Swing traders equal huge cash flow. Yeah, for the most part, you wanna have some capital before you really start swing trading, because you could technically lose some money. Because right now I'm down, let's see. All right, so I'm down $300 right now on that swing trade, which is fine. I'm okay with that. Because again, it doesn't expire till March 17th. Right. So I'm okay with that. All right. Uh yeah, so yeah, so typically that's what happened. I was about to say something else. Who else said something? I lost my train of thought. But either way, all right. So again, in this market, it's kind of tough to swing in. All right. Simply because of that. Oh yeah. So the gaps. Okay. Yeah. So again, I'm gonna show you guys a little bit of what I've been working on that I still haven't finished. All right. Talk about the gaps here. Let me share this top secret document real quick with y'all. All right. Let me see. All right, so typically this is, let me know when you guys can see this.
Yeah, we see.
All right, so typically this is kind of what I'm going over, because the gaps are always been a conversation. And I know you guys have asked me, especially when we first started, I had no real idea. And I was trying to figure it out, and I could just never figure it out. And then I started to just read a lot of different stocks and a lot of different patterns. All right, and I was reading some other stuff online, and I came up with this in terms of what happens. All right. So, basically just go over, just the basics of this. I'm not going to read this, but you guys can read it. So the basics of what a gap is. Obviously, when the price ends one place and gaps down to another, or gaps up. So I just have some examples of that here. All right. So now, why does price gap up? Okay. Gaps in financial markets occur when there's significant difference between the opening price of a stock and closing price from the previous trading session. So that's all things that you guys already know. All right. Now, the reasons that they do that is a variety of things. Okay. News, change in market sentiment, supply and demand dynamics. Okay. All right. Now, again, smart money or institutions will try to skip important support resistance levels by gapping up above supply zones if they're bullish, and then vice versa. So a lot of times you get those gaps, because remember I was saying, I think it was last week, when I was saying there's no retail traders really in this market right now, right? It was institutional buyers that gapped the market all the way down or up. I couldn't remember exactly what it was. I think it happened last week. And I was saying that, there's no institutional, there's no retail traders like you and I that would have held any long trades after that whole the horrendous week where it was just dropping like crazy. So that was institutional buyers trying to get gap up above a previous resistance level. All right. Now, when you trade these gaps, okay, they can act as support and resistance levels. All right. All right. This is the gap fill. So the process where the price retraces, closes the level where the gap originated from. This means that price moves back to the level where the previous day's closing price was, which fills the gap. All right. So now, and then it goes on to talk about the rate of gap filling depends on, the size of the gap, the trading volume for that day. All of these different things are based on what fills those gaps. All right. But if you go down, it talks about what I call a breakaway gap or a runaway gap. Okay. A breakaway gap or a runaway gap. Okay. And when you have these, all right, you had the gap down here, from here down here. All right. And then it came back up. Gap was filled and continued to go in the same area downward. All right. So again, you have that be based on the volume, based on the trend. In this particular screenshot that I took, it was an overall downtrend. All right. That's why it closed the gap and then it came back down. All right. And then again, I go over what all these is. A breakaway gap is a type of gap that occurs when there is significant price movement that breaks through an important level of support or resistance or significant trend line. All right. And then I have these examples here. All right. All right. So we have basically a double top, which is a reversal pattern. All right. We had a strong support level here. All right. And then we had a gap down past this strong support level. All right. This thing gap all the way down here. Then it pulled back to this support level, right? And then continued to head down. All right. So there's a lot of things, all right, that basically signify whether the gap is going to go back and fill or whether it's going to break away and continue to go. All right. So this is a perfect example. And this is one that we saw. Remember that day where it went dropped all the way down? This is back, I think, in September or December, I think it was. But either way, all right, there's a strong level of support. So the blue line that I have here, notice that it supported at this level a lot of different times. So you see this huge blue candle where I have this little arrow? That is a strong level of support. This thing moved all the way up here, right? Then you have the double top, a reversal pattern, right? So in order for this market to continue to go down, right? Because the neckline of this double top is right where this strong support level is. Because this market went from 410.46, that was the top, all the way down to 374.88. So the market was coming down, but it had to get past this huge support level. And the way to do that was a gap down, which became a breakaway gap. And if you notice this candle here, it pulled back a little bit and then continued to come all the way down. And now you got a gap here, drop down, all right, and continue to come down. You had a gap fill and then continue to come back down, okay? So when you see this, again, I'm not finished with this document yet, all right? Why do they occur, okay? And again, just to get past key levels of support, and then you guys can read all of this. And again, I had to go through and explain the runaway gap, and then there's something else that I actually have to do as well. So this is the document that I've been working on for a while, but I promise I'm gonna get this done because it's a lot of good information in here in terms of how to trade those gaps. All right, so when we get off this call, I'm gonna probably finish this. All right, but Sophia, to answer your question, that's kind of, the effective strategy to trade those gaps, okay? So if you guys notice when it gapped down, if I go back to over here, let's see a couple of times that it gapped down. One of the times was, I think it was last week. Let me see. Okay, perfect. Yeah, so if we go to a 15-minute chart. So again, with this gap up, because it bounced off the 200 MA, and because it broke above these key channels, right? This gap up, I figured it wasn't going to be filled. Now, I didn't trade this day. All right, this was Friday. All right, but I think it gapped down somewhere else right here. All right, so this day here was last week, Wednesday. All right, we got the huge gap down, right? And I said it was probably going to go back up to refill this gap. All right, because you got down here, you got to pull back here. Down here, then it was going to pull back here. All right. Now you're at a key level of support. And instead of coming back down to continue the downtrend, it consolidated. And you guys know whenever there's a big move that's about to be made, you get a lot of consolidation. All right. You get a lot of consolidation. So understanding the gaps will let you know. Also, this day here, I remember this day when we had this huge gap down, right? All right, this huge gap down. Okay. And again, this yellow line here was a key level of support. All right. Had this huge gap down, couldn't really get above it. Then we had the huge gap up, but it closed this gap. And now this gap is working as a point of resistance. Okay. Like if I go back to the document, you'll see that sometimes these gaps can work as key areas of support and resistance. All right. So we see this. All right. Here, the gap closed here, but it worked as a support. All right. It gapped up back here. And then when it came back, that gap works as a support. All right. Same thing here. So we see that, all right, here. All right. This gap here acted as a resistance here. All right. Close this gap. And then from here, it resisted. So if I draw, let me get a ray, draw here. Right here. All right, so boom. So the gap was filled here. And look, so from this line to see this huge red candle here, it hit this same line. So now the gap acted as a resistance and it came all the way back down. All right. So once you understand the gaps and how to trade them based on certain key levels of support resistance, hold on one second. Let me cut this light on, guys. All right, so based on key levels of support and resistance, you're looking for if it's gapping up because of a key level of support resistance, is it gapping up because of some type of news event? All right, so excuse me, that's how you can trade these gaps and understanding, well, is it going to come back and fill this gap or is it not? Okay. All right, so eventually from what I've seen, I guess I wouldn't, about 97% of the time, these gaps are going to get filled at some point. I mean, it could take a year, could take 2 months, could take a day, but these gaps will get filled at some point. So, all right, they just act as indications. All right. So again, with this gap, we got a strong area of support. All right, we got a strong area of support. All right, because we got a demand zone. I wouldn't call it a strong area of support, but we do have a demand zone here. All right. So again, if we get the scenario where it turns out to be a bullish scenario, it might come back, fill this gap, but this gap may act as a form of support and it may continue to go back up. All right. So those are things to be watchful on in terms of, all right, those gaps. Okay. Those gaps. All right. Same thing here. You got a gap down here. All right. And then they continue to come down because we're downtrending. See, we're inside this channel. All right. So you got a gap down, came back, filled the gap, came back down, gap down. All right. Then look, this gap all the way up. But guess what? Because I understand this purple line, all right, is a key area. All right, that's that 4159. That was a key area, all right, of support, which is a key area in general. So when this gap all the way up, right, I think I remember this day, I said this is going to come down and close this gap. All right, and it came all the way back down, closed that gap, then came back up. Then it gapped way down here, all right, gap way down here, all right, close to this 393.79. It supported there, came back up, gap way back up here, all right. All right, then again, it came back down, closed this gap, All right, close this gap, continue to go down. All right, and so that's kind of how the gaps are. So again, I'm gonna finish that document because there's a little bit. There's those two main ones. There's a couple other ones, but I'm not gonna put all of that in the document because you guys probably won't read that much anyway. So I'm gonna respect your attention spans, and I'm not gonna make it too long. All right, so but it is some good information to understand gaps, why they happen, and how to actually trade them. All right. So QQQ, all right. All right, in terms of what we're getting this week, I'm sorry, we just covered QQQ. Apple, okay. So in terms of what I see from Apple this week, all right, again, all right, you had a technically here had a high, all right, you got a low, lower high, lower low. Now you got a high here that was at the same high as this over here. All right, so you got an equal high. All right, so technically this, if you draw a line, this is an equal high, okay? Right, which means this is turning into a strong area of support, all right? Of support and of resistance, should I say, right? All
Would
right,
you call
because
that
typically,
double top?
huh?
Would you call that a double top?
Not quite, but yeah, you technically can. Technically can. All right, because it's still kind of in this area. All right, it would be a funky double top, but you still have the area of equal high. Okay, because again, whenever you're trending, if it's up, you want to see here, pull back, higher high, higher low, higher high. And same thing if you're coming down, you want to see down, you want to see pullback, you want to see down again, you want to see pullback, you want to see down again. All right, so typically, all right, you got a low, higher high, higher low, higher high, higher low. Technically, you got a high, you got a low. All right, you got a lower high, you got a lower low, lower high, lower low. That's what you want to see when you're talking about continuing a trade. So here we had our high, low, lower high, lower low. But here it could not break above, all right, this to create another high, all right, but it also didn't, right, break down here, okay, because to continue this trend, you would have needed a lower high, okay, but this created an equal high, right? Which is typically the same thing as continuing of whatever the trend is. So in this case, anytime you get an equal high, it's continuing this downtrend because it acts as a resistance. If you get an equal low, it's going to act as a support to go up. Okay. All right. So in Apple's case here, all right. Again, the key area here is this 153.50. All right. All right. And then obviously where this double top is up here, which is at 157.47. Okay. All right. So those are kind of where the market, where we're going to see it to go. So if it continues to go up past this level, all right, then we wait for the retest and we continue to take it up. Okay. All right. Or because of this double top, because of the market and everything that's going on, all right, it'll probably get up here to this 153.50. All right, then we could see some downside to create a lower low. Okay, to create a lower low. All right, so again, I would anticipate again with the bearish sentiment of the market, with the news that's going on, I would anticipate to continue to drop because again, it's a equal high, which is technically the same thing as a continuation of a downtrend. So I would expect for this to come here and create a lower low. All right. All right. So for Amazon, okay, for Amazon, all right. Get rid of this alert. All right. All right. So for Amazon, all right. Now, still kind of still showing uh a a head and shoulders pattern. Okay, still showing a head and shoulders pattern here, where you got your up, down, up, down, should come back up here, and then continue to come down this way. You got your left shoulder, got your head, and you got your right shoulder. So again, I think this is going to pull back to about this 98.31. All right, somewhere up in here. All right, possibly, you know, this 100 area, somewhere up in here. Okay, form this right shoulder. All right, and then continue to come down. All right, continue to come down. All right, it's a perfect setup for that head and shoulders pattern there. All right, so again, understanding these patterns will, you know, give you guys a good indication of where the market is going. But remember, the market doesn't have to do that. It's just an indication, okay? So again, we'll see what it's going to do. But I like this because look, you got the support here, right? Right at the key area, okay? And also where this one supported at, right? Which is setting up perfectly for the head and shoulders. All right, so again, I'm looking to see some pullback up into this area here. All right, between this 98.31 and this 100 area. All right, looking to see some pullback there. And if we can get a resistance here, all right, because technically we don't enter the trade until we break this neckline of the head and shoulders pattern, which will be right around this 91 area, okay? So that's technically when you're supposed to enter the trade because it's supposed to continue all the way down. All right, but again, because we're day trading, all right, I'll get in here. Also, this could be a swing possibility. I'll call it out if I do decide to do it. But if I get the pullback here at the 98 to 100 area, I may swing that and take a put, all right, with a March 17th expiration date, all right, because that's a good setup, especially with the catalyst news coming on March 17th. All right. All right. And so that's all of them kind of that I look at. Let's see something. ES. Yeah, so ES at a level of resistance here. Let me see something real quick. All right, so you got a demand zone here on a weekly time frame, right? So it hit here and continued to bounce up, okay? Also at a strong area, this white line I have is a key area, key level here. All right, so looking like everything is going to continue to go up for the ES, and the ES is typically like SPY. So you take basically the ES number, which is at 4045, and I think you divide it by 100. All right, and that'll give you the SPY number because SPY is right at 404. All right, so they typically kind of go hand in hand. All right.
Then when did that start running? Because I looked at the ES earlier today. I didn't see a timer on it.
Yeah, it's closed on the weekend. I think it starts to run at 9 p.m. I think. Don't quote me on that though.
Okay.
Yeah.
Yeah, it's moving now.
Yeah, don't quote me on that. But yeah, but if you look at it overnight, this is why you're gonna get the gaps in SPY. All right. If ES for the overnight volume, if the volume is really high overnight, you'll get a gap up in SPY for the pre-market.
Right.
Yeah. Yeah, yeah. So, but that's typically all I had. Did you guys have any questions? Any questions? So that's kind of what I see happening for the week. We'll continue to get some push up, which will be good for all of the stocks. Any questions? If no questions, again, I want to respect everybody's time.
Thank you, Kevin.
Oh yeah, no problem, no problem. You do all these lines.
Thank you.
Oh yeah, no problem, no problem. And again, we'll be on in the morning. I'll probably go live in the morning. My kids are out of school, so I'm not going anywhere tomorrow. They want to go to the Strawberry Festival, but
Ooh, have fun with it.
they could probably cancel that. We probably not gonna